Hello traders and welcome to another video review. Today is Monday, January 10th, 2022. Let's start with the Forex calendar. What do we have here on Monday? As you can see, there isn't much important information scheduled for release for today, but we still have the unemployment rate from the Italy scheduled for release at 10 o'clock, and at 10:30 we got Sentix investor confidence from the Eurozone, which is expected to be lower than the last time, 12.6 points versus 13.5 points, and the unemployment rate for the Eurozone scheduled for release at 11 a.m. The unemployment rate is apparently supposed to decrease from 7.3% to 7.2%, which is of course good for the overall Eurozone economy. During the New York session, what do we have are wholesale inventories and the consumer credit. They do not have that much impact on the market participants and on the market behavior. So pretty easy beginning of the second trading week of 2022. Let's take a look at some charts. We are going to start with the US dollar index. Why we are talking about this? The first thing is, as you can see, we just entered the main channel. After the 96.90 technical resistance has been hit for the second time, almost. It was like a 2 pips or 3 pips miss. The market declined towards the level of 95.50, which is of course the technical support for bulls. We have the bounce, and since then we are back into the channel and trading in a very narrow range between the levels of 96.43 and of course a recent low at 95.68. However, the range is from 96.92, which is the swing high, and of course the technical support at 95.50. So we are right now trendless. We are in the consolidation phase. Let's take a look how much we have retraced from the recent low on the October, the end of the October. So we have retraced, I think it will be 38%, about 38%. There you go, exactly. We retraced since the November highs, 25th of the November, and then since the 15th of the December, only 38% of the whole last up move from the from the October 2021. It means that this is only a pullback or some sort of the correction. However, a little bit complex in a time, especially, and in price, because it looks like a complex correction. However, it's still some sort of a internal pullback that will end up apparently with uptrend continuation. So as you can see, we got this channel here, the gray channel, but I can put another, maybe that one, short-term channel here. The orange lines are marking this channel, and if we assume that this is the low of this correction, the level of 95.50, let's say 95.51, which is 38% of the Fibonacci retracement, we can project another target based on the current trend at the level of, let's take a look. If we consider this and that, let's say 0.61. There you go. Two next targets for the extension to the upside for the US dollar are 97.70 and 99.10. So that's pretty good beginning for the US dollar index, if we of course if we won't be trading below 95.51. So how is the euro dollar doing? So the euro dollar is still having problem with the level of 1.1373. A recent bearish engulfing had resulted in another sell-off down to the 1.1271. We have a bounce, but still the market trades below 1.1373. And as you can see, the momentum is bouncing up and down around the level of the 50, which is of course the neutral level. So market of the euro dollar is right now trendless. However, in the larger perspective, euro dollar is of course still in a down trend, which means the US dollar index might continue to the upside. So what we should see, coordinated move. Euro dollar continues to the downside, 1.1167, 1.1153 is the next target for the euro dollar, and of course US dollar index is going higher. What is then euro dollar to the Japanese yen doing? Euro dollar to Japanese yen is following our path of the Fibonacci sequence. As you can see, we have hit the target. The target was here at the level of 115.93. Apparently the market has stopped at the level of 116.36, which is just below 200% of the Fibonacci retracement. So right now we don't need 1.61. We just of course delayed it. Now we are testing the technical support, which was the previously high for the wave 5 here, at the level of 115.53. so this is that moment, and this is the wave 4. When we complete the wave 4, all right, we should extend the wave 5 higher above 116.36. So please pay attention to the current developments, despite the fact that the market is right now coming off the extremely overbought conditions. We need a bearish divergence between the price and the momentum oscillator, so we need something like that. This momentum oscillator should go lower and the market should go higher towards the targets. The targets will be posted as soon as the wave 4 is completed. Right now it looks like only the first wave of the wave 4 correction. Let me just move this channel. I didn't want to do this that much. There you go. I think that's the low, so we should take into the consolidation. There you go. So that's the main channel. We should bounce from the main channel upper line, so we should bounce from the zone of 115.53, 115.35. This should be the low for the wave 4, and the market should continue to the upside. So that's about euro to American dollar to the Japanese yen. Last but not least, let's take a look at Bitcoin. As we noticed recently, the Bitcoin has tested the level of technical support, key technical support for Bitcoin. 41,000 and 41,150 is this technical support, and the other one is 39,540. This is the zone. The zone is marked with the green rectangle. We have to bounce from this zone. We have to bounce from this zone, because if not, the market might start to feel much more uncomfortable, with the current prices. So right now, this is the key short term, even the long term, because the last low was last year September, and the highs were last year June. So that's the long term, mid-term to long term technical support and demand zone for Bitcoin. We need a breakout above the level of first $43,053 and then $45,429. If there is no breakout above these levels, it is not good. If we make another lower low below 39,540, we are going straight towards 36,520 and then $30,000. So that's the $10,000 move. So please pay attention to the Bitcoin. We already hit extremely oversold market conditions, but if we keep trending, those conditions will appear here for a longer period of time, and the market will drop towards $30,000. So please keep an eye on the demand zone on Bitcoin. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.